Avenue. We're doing Tech Teardown for Friday, November 22nd. Let's get right to our first headline. Chip giant Intel hosted its Analyst Day on Thursday, and shares are down quite a bit Friday morning with losses of around 5%. Investors aren't too happy about Intel's revenue guidance for the next year. What else did Intel have to say?
So taking a little bit of a deeper look, PC client revenue is supposed to be down in the mid-single digits. Data center revenue is going to continue growing and be kind of relatively healthy on that end. Low to mid-teen revenue growth there. The other Intel other architecture segment, which includes things like mobile and kind of the miscellaneous bucket, is supposed to be about flat. Operating loss is supposed to widen as they continue to invest in this business. The net result of all of that is that Intel expects revenue in 2014 to be about flat, while investors were expecting for them to put up growth in the range of 1.5% or so.
So investors were not encouraged by the numbers, but beyond the numbers, did Intel mention any key strategic shifts?
There are two, and the first important one is on the foundry side. So Intel's new CEO, Brian Krzanich, is really focusing on expanding this foundry business, which is a direct contrast to his predecessor, Paul Otellini, who had always been very reserved with the foundry strategy, saying we'll have select customers, being very adamant that they're not going to enable direct competitors. And Krzanich is really taking the exact opposite stance, saying, hey, we can do this better than anyone else. We'll take any and everyone more or less. And the two big plays here are going after potentially Qualcomm and Apple. Qualcomm is very much a direct competitor, and Qualcomm uses a fabless model, so they don't make their own chips. Whereas Apple's a little bit more complicated. They're more of an indirect competitor in a way. But this is really the only way that Intel can ever get into iDevices. And that's a huge opportunity that's definitely worth going after.
Yeah, as I recall, Paul Otellini, the former CEO, actually said that was one of his greatest regrets.
Yeah, and you hate to look back and say, oh, we should have done this or we could have done that. But going forward, if Intel ever wants to get exposure into Apple's iDevices, Apple has bet very heavily on its own custom chips. So it's pretty much not ever going to happen that they're just going to switch to Intel chips as is. But a foundry relationship where Apple designs their chips and Intel makes them, since Intel does have the advantage in manufacturing, that's very much up for grabs right now. And been all sorts of reports about Apple hitting up global foundries, Samsung, Taiwan Semiconductor, obviously Samsung, but Taiwan Semiconductor, and now Intel can really get in here and really take this seriously.
I want to talk about the CFO's presentation. I thought the slides were great. My favorite part was that he began with a haiku, which reads, "Units autumn renew, warmth of data fireplace, spring mobile motion." I think this is probably a little untraditional for investor presentations. Could you maybe explain what he was getting at, if you have any idea?
Well, I think the first line is really talking about, right now they're trying to reposition themselves into a much broader range of devices, which will hopefully drive unit growth. The second bit, I think, is talking about data fireplace. The data center business right now is currently their healthiest business in terms of revenue. So I think they're just really enjoying the warmth that business is providing. On the last line about mobile, I think what they're getting at is that they still are the leader in process technology, and the more they can leverage that advantage, they can potentially
get further into mobile.
Right. So they can hope to gain traction in tablets, which is actually the second strategic thing that they talked about, is really focusing on these tablets, especially going into these $100 and less tablets, which also inevitably includes embracing operating systems like Android and Chrome beyond their kind of historical Windows roots. So I think that's really where they're going on the mobile side, is trying to get in these low-end tablets.
For the record, I think there should be more haikus at Investor Day.
No, we should.
I really enjoyed that one. Music streamer Pandora reported third quarter results on Thursday. Shares opened higher on Friday, but have given up those gains as investors digest the results. So how'd Pandora do?
So let's see, starting with the headline figures, revenue was up about 50% to about $182 million. Of that, advertising revenue was $144 million. Of that, over $100 million was mobile advertising, which is a pretty strong milestone that they hit for the first time, breaking that $100 million mark. They still posted a net loss of about $1.7 million, or about a penny per share. Pandora continues to increase market share, which is good. In October, they had about 8% of the U.S. market, which is up from about 6% a year ago. And they're now up to about 71 million active users.
So you've mentioned before that the one thing you really want to see from Pandora is a proven ability to scale. Have they made any progress there?
They have. So ad revenue did outpace content acquisition costs in terms of growth, but by a slim margin, by only about 1 or 2%. But it's still positive to see that happening. Subscription revenue also almost tripled. That's been a relatively smaller part of their business historically, but that's a pretty nice gain there, and that's in a way that also reduces the risk because they're diversifying away from advertising into something of a more reliable revenue stream from users directly, willing to pay to get rid of the ads more or less. I think that they also, on the expense side, sales and marketing expense almost doubled. But I think that the real opportunity going forward for Pandora is really to focus on this local ad opportunity, which is something the CFO spent some time talking about on the conference call. Because local ads is really where it's at in the radio business, generally speaking.
Right.
So as Pandora continues to focus there, there's also higher prices on the local level. So we could see some more upside there in terms of, to the extent that they can really grow this ad business, which is the fastest growing part of their advertising.
So Pandora's competitors just seem to keep multiplying. I mean, with the recent launch of iTunes Radio, as well as Google Play Music Store and Spotify, was there anything in this report that gave investors some reassurance that Pandora is holding its ground?
I think so. And interestingly, Spotify headlines just today or yesterday that Spotify just got a $4 billion valuation, which is almost as big as Pandora, which is kind of crazy to think about. But I think that these numbers are reassuring in that we're not seeing users really take a big hit. I mean, they're starting to decelerate. So Pandora will, hopefully they can work on getting that growth back in terms of getting users. But we're not seeing Apple and Google and Spotify really eat into their user numbers or engagement figures in a real meaningful way, and they're gaining market share. So I think they are playing pretty solid defense, and I think a lot of that is they have a really strong brand recognition. They're the first real music discovery streaming service out there.
Okay. Microsoft launched the Xbox One on Friday, a week after Sony's PlayStation 4 was launched. And Sony's launch, it was tarnished by reports of faulty units, but the company still managed to sell 1 million units on the first day. Now reports are surfacing that the Xbox One is facing some problems.
Yeah, it looks like the Xbox One, there's a lot of users complaining that the disk drive is faulty. You put the disk in and it just doesn't work properly. Some of them aren't turning on. There's some reported problems. Some of the power supplies might not be working. So there's kind of a wide range of various issues here. It's hard to know really how widespread this is and how much.
Yeah, like how meaningful is it? Because last week Sony said that the number, it seemed mostly confined to pre-ordered units, and that the number of Xbox affected was, I think, less than 0.5%.
They said less than 1%, which could also be less than half. But yeah, so we know that it's probably not a huge issue, but we're hearing a lot from the small minority of people that are being affected, which could also be the case for the Xbox One. I mean, it's purely anecdotal, but if you look on Amazon, there's a lot less number of negative reviews on the Xbox versus
compared to the Sony.
The PlayStation 4. I mean, there are hundreds and hundreds of PlayStation users complaining, and these issues, at the heart of it, seem to be less serious than the PlayStation 4s. So hopefully Microsoft can address this going forward. I wouldn't worry about it too much because like all product launches, you're going to have some problems along the way as long as they can address it and move on.
So Sony sold 1 million units. What's the number of units that you want Xbox to sell to impress you?
Well, of course, now Sony came out first, and with them releasing within about a month of each other, Sony kind of sets this bar of 1 million. And if first of all, we also don't know if Microsoft will actually say anything and announce how they did over the weekend. But I think that now investors are anchoring on this 1 million figure, and they're going to want Microsoft.
There's the obvious comparison,
right? And because these two are direct competitors in this space, and they're only two meaningful ones. I mean, the Wii U, I'm pretty much writing off as a mistake at this point.
Well, of the two products, though, which do you like better as an investor?
I think that from an investor's perspective, Microsoft probably knows what it's doing more on the platform side with building an Xbox platform. The Xbox 360 really transformed throughout its lifetime into really much more of this multi-purpose device, where Sony is really still banking on just the gaming foundation of it. But also more importantly, the Xbox One, because Microsoft does these other platforms like Windows and Windows Phone, it can kind of leverage that and integrate that throughout the rest of its services, including Skype. Skype's a big part of the Xbox One. Whereas Sony is really they don't have much of a platform built around them. I mean, they have PlayStation Network, but I can't imagine people really buy a lot of things on PlayStation Network. Like media, I can't imagine people do. I have a PlayStation. I've never bought a single movie on there, and I can't imagine ever doing it. But the Xbox platform is a little bit more viable in that sense.
It has a bigger addressable market.
Right.
All right. Let's get to our final story. Apple investors have been widely expecting significant supply constraints for the new Retina iPad mini. There are now some possible signs that perhaps the supply isn't that bad. What have you been hearing?
So if we look at, over the past week and a half, so the Retina Mini launched, last week.
Yeah, it was a stealthy launch, a quiet one.
Yeah, they didn't really, make a lot of fanfare, which was kind of strange for them. But, I personally, I was expecting when they launched it to, after the initial batch sold out, they might have some, shipping times might slip to a couple of weeks, like what happened with the 5S almost immediately. But right now, it's been a week and a half, and shipping times are only back to like 5 or 10 business days. You can actually find them locally using their personal pickup tool, and Apple just now started accepting walk-ins, so people just walk in off the street can buy one, whereas before they were kind of reserving it because of low supplies. So there are a lot of small signs that they're really keeping up with demand, and I don't know if they'll be able to reach supply-demand balance this quarter. I want to say they probably won't, but at the same time, it seems like right now they're keeping up pretty well.
So recently, Tim Cook predicted that he thinks it's going to be an iPad Christmas. Do you think Apple's going to be able to make it happen?
So yeah, that's what he said on the call, and I was a little bit skeptical about the ability, if you're wanting an iPad mini with Retina display, maybe it might not be an iPad Christmas, but I think with the indication that we're seeing on the supply side, it looks like they really might be able to supply enough of these. I think probably the most important thing for investors to think about going into this quarter is that the three most important products, which are the iPhone 5S and both of the new iPads, are appearing to be either in demand balance or catching up to demand balance. iPhone, shipping times are only a couple of days. In comparison, in the year-ago quarter, the flagship iPhone 5 was significantly constrained. The iPad mini was also significantly constrained. So I think that this time around, they're doing a lot better with keeping up with demand. I think part of that might be, we've talked about this before, they might have gone back to Samsung to get more Retina panels for the minis. So that might also be helping their supply situation. But I think it's going to be a pretty good, and these are all positive signs for this quarter's results.
So the holiday quarter is obviously coming up, like we've been saying. Last year, Apple did some promotional pricing. Apple almost never does promotional pricing, right? I think only for Black Friday, maybe?
They do have a Black Friday sale, but usually the third-party retailers are the ones that are a little bit more aggressive with their third-party.
Do you expect them to do some promotional pricing around the iPad this Black Friday, given that there are constraints?
I think they probably will, just because every retailer is going to do it on Black Friday. They'll probably do it a little bit less aggressively as others. I think some of the like Walmart and Target are offering going pretty low, and in some cases an iPad Air after these discounts is about the same price as the iPad Mini. But I think that on the demand side is probably where Black Friday.
Do you think, given that the iPad Mini and the iPad Air are so close in price, you just mentioned that they're like $100 apart?
$100 normally.
Right. So do you think it's possible that people will come in looking for the iPad Mini and not be able to get one and say, iPad Air, it's right here?
It's possible. I mean, if you need a gift on the spot for your cousin or whatever, and you got to get what you can get. But I think coming back to the Black Friday thing, I think that the demand side is really what will be important for investors to look at, because right now, even if they look like they're starting to catch up right now, Black Friday is really when all the demand pours in. That's the onslaught when holiday shopping really begins. So
and the subsequent Cyber Monday as well.
Right, and just for the following, the whole shopping.
Month.
Right.
Yeah.
So we'll have to see how Apple holds up once Black Friday kicks off the holiday season officially in terms of shopping. And right now they're catching up, but if people
when the
just
deluge
start,
comes,
I mean, they might have trouble then. We'll have to see.
All right. That's all for today on Tech Teardown. Want to learn more about the tech stocks we're investing in? Just send an email to cto@fool.com and you'll receive our special free report on our Chief Technology Officer's favorite social stock. For Evan New, I'm Erin Kennedy, and we'll see you next time.